Thanks, DJ, and good evening, everyone. I hope at least for the next 2-3 hours you will be able to listen to me. How many of you are already feeling sleep tonight? That's good. I got the answer, honest answer. I never expected that from you, Ashish. Okay, let's get this going. So you needed to know why OI Pulse came into the picture, how you can use OI Pulse to your advantage in your trading needs. Many of you wanted to know, there are different ways to decode the data. There are people who use harmonic patterns, there are people who use Elliott waves, there are people who use OI data, there are people who use market profile, order profile, you name it, everything works. The interesting thing is, I got more interest into the OI, which was giving me a point of interest wherein how these guys are creating the position, why they are creating the position, how it is getting moved, why the option price is moving on certain days, why it is not moving on certain days, why the FLNO scripts are moving like crazy. All these things started moving a lot of things in my mind. Then I decided, okay, let me start to decode some of these data to understand in more detail. I was looking for various portals and other things, but some of them were giving certain data, but not all of them which I wanted it. Then I realized, okay, why don't we build our own tool? That's how we started doing it. And whatever you see it here, most of them will have a personal touch. The reason is 90% of the information, what you're going to be witnessing, it would have either personally worked by me, or I would have some point of the time, I would have taken some help and then did it on that particular process. So the first tab, which you're looking at is the dashboard. Here, on the top, you will be able to see the dashboard. I'm just going to go one by one. Here I've included the Nifty 50, the Dow Futures, the Bank Nifty, India VIX, the crude, and then the USD INR. Or, if you look at this chart, all of them have something in correlation. When I came into the market in 2007, the first thing my friend told me, the guy who pulled me into the market was, Shiva, first thing you needed to be watching is the Dow. We didn't know anything about the market, but he told me, Shiva, you needed to be looking at the Dow as an E-optimum. Okay, so all these things have in most one thing which is common. As if my friend told Shiva, you needed to be knowing about Dow, what it does. Without knowing Dow, you may not be able to trade in Indian market. I used to wonder, what is there is going to be a correlation between a Dow to trade in our markets? I used to wonder about that. Then I understood, in most of the trade which is happening in the world market is going to be dollar denominated, and everybody wanted to have dollar as in currency, and everybody just trade against the dollar. So dollar has its own, and most important thing is the GDP and the number one economy in the world. Everything depends upon them. That's the reason the Dow is called as the mother of all markets. So whatever the Dow does, it is going to have a reverberation, in a family. Imagine Dow I consider as my mother, okay? If mother is not keeping well, most importantly, all the family members will be having a sad time, because mother is not well. We will also be not doing anything much. We will try to support the mother. In today's scenario, you just look at the pattern over there. What's happening with the Dow to what is happening with the Nifty? We got an exit poll result. The exit poll result says that the BJP is coming back to power in UP. Everybody in Gango, the market is going to be gapping up another 200, 300 points. Exactly at 750. The Dow started falling and our market is starting to fall. Equally, you can see that on the chart over there. The top which was created was at around 750, and the market also made a top exactly at that level, 16,022, and then we have started following it. So, whether I should be following the Dow on all days? Not exactly. 90% of the time, yes, the Dow does whatever that need to be done, and then our markets follow. But most interesting thing is we tend to have our own reactions based on certain things which is happening in our market. Say for example, there is a budget session scheduled, or in the elections, or you mean to say have the policy, an RBI policy announcement. Those days, our market will not listen to it. Why? Similar to we as a friend, we would have gone to friends to do the party and other things, right? So we will have our own party on those days. But 90% of the time, our markets, or almost all the world markets, follow the Dow. And that's the reason we have shown the Dow and how it can help you to understand whether the market is going to move aligned with the Dow, or whether we are going to be doing a different ball game altogether. Okay, now the Dow theory is done. Moving on. It is a strange phenomenon. The last few days, the market has been continuously falling. By this time, the VIX should have been rising above 30, 35 mark. It moved from 27 to 30, but there has not been a significant move beyond that point. This is sensing that the selling exhaustion is coming in at the lower level. There is not much of sellers who are trying to create any positions at this juncture. By this time, I should have seen the VIX moving 27, 28, 30, 32, 35. For the last 400 points or so, you're not seeing that particular information, and this VIX chart is indicating that to you. So if you wanted to see it on like in a VIX on a smaller time frame, you can clearly see the VIX, when the market was somewhere around 16,500 and so, it went to a VIX of 34, 35. But in the last 1 week or so, in spite of the market being falling like an almost 500,000 points, the VIX is not jumping much. When the VIX will be jumping? Why the VIX is jumping? I don't want to get into the technical terms. Just give me a simple answer. Why the VIX jumps once the market falls? Anyone? Fear. Fear. The fear is the main reason, correct? Then why the VIX falls when the market goes up? Great. What is VIX out of? For me, I'll put it in a simple term. I don't want to get into technicals at all. How you can correlate the VIX? The VIX shoots up once the shorts are coming into the system. The VIX doesn't shoot up once the shorts are going away, but the VIX is going to be shooting up once the shorts are coming into the system. That's the most crux of the element. Don't worry about anything else. Wow, whatever people say it logically and other things, this is the most crux. Only when there is a short created, when there is a fight which is happening between a bull and a bear, you will be able to see the VIX moving higher. More the VIX going lower and lower, you will be getting to see the volatility coming down. You are not going to be seeing the people adding more and more short position. In today's scenario, with the Nifty not moving, Nifty moved almost in 300 points today, but we didn't see much of VIX reaction coming in the second half. There was a recovery which happened. The Bank Nifty also tried to recover, but the VIX is playing its part. There is the possibility of a short covering happening. Be prepared for that. It may be a temporary one, but the VIX is giving you the first hint. The VIX will be the major hint which can give you both on intraday and positional. In terms of the intraday and positional, I normally look for positional, the VIX levels between 12 to 15. That's the area wherein you will be seeing the long-term positional players adding more position to their kitty. Between 15 to 18, that's the time they reduce their portfolio, try to cut it down. Almost someone who's holding it for 3-5 years, they cut down their position. Once it crosses the 20-25 mark, you will see the basket order selling coming in big time. As of now, why the FIs are selling? The FIs continuously selling it, and every day you're getting to see 5,000, 6,000 crore of selling. And that's going to be stopped once the VIX is going to be cooling off. When the VIX will cool off, the guy who's shorting the system, he has to stop it. That exhaustion has to come. The exhaustion can be the first sign that can be getting an indicator from the VIX. Yes, Pranav? You can Google it, but normally I'm not a guy who wanted to go into the technicals in terms of the values, how and other things, but I'll give you a simple logic. I'm a guy, I don't get into the alpha, gamma, in Greeks and other things. The way over a period of time, how the VIX has transformed. When I say this 12 to 14, 14 to 18, you will see just the way how they have been creating the positions and other things. Last time when 2020, what was the high VIX level which went up to? 80, 85? So it was continuously selling off from 20 to 30, 30 to 40, 40 to 50, and it shot up. Right? Are we seeing a similar pattern? How many of you are saying that you are seeing a similar pattern? I'll just show you that. What has happened last time? You guys needed to know how it has happened, right? I'll just show you that. This was the VIX level in 2020. Okay, it was trading at 23. And the market was trading at 12,000 change. On this particular day, the Nifty fell 430 points. The Nifty had a spike of more than 30%. If you thought this is falling knife, let me catch that, because Nifty in a day falling 400 points is a golden opportunity for me to invest. That's not the game. The real fun begins here. The next day, again in the next couple of days, it fell from almost, it roses from like in 22 to 30. The Nifty fell 538 points, which is 5%. And then the Sensex fell 1,900 points. And then the Bank Nifty went to almost 1,400. Sorry about that. Check. Then, if you thought this is the finale game, from 30 it went to 41, and then the index fell 868 points. What is the difference between that period and now? The index has been falling in the last 2-3 days. Are you able to see a difference? By this time, 400-500 point fall, I should have been seeing the VIX climbing above the 35-40 mark, but it has not been climbing. That's the major difference which I want you to understand. If the VIX is shooting up, the shorts are coming into the picture and they are not letting it go. Where did they stop it? This was another one. Can you see the VIX climb? From 20 non-stop rally to 56, and this particular day we had a Nifty fall of more than 450, and the finale day, this is on the March 24th. The Nifty went all the way up to, the VIX went all the way up to 87, 88 odd zones, and then it cooled down to 83, and then the IV levels on that particular day was close to 140 on both at the money strikes, which was very unusual. Someone who would have seen the IV levels at 20 and 30 on this particular day, it went to 130, 140. And the Nifty went to a low of 7,500. From 88, the VIX started dropping. And then you had an intraday recovery of more than 400 points, and that's when you start to recover. The exhaustion came at the high level of 88, and just give it another 2-3 days. Let the VIX cool off. Then you see the smart money coming back into the system again. That was a big shocker for many who were experiencing, expecting that no, VIX can't shoot up beyond 40, 50, and so on. The VIX will be giving you the big clue there when the selling exhaustion is happening. And that's the reason it's all the way important for us to be not only tracking the VIX for intraday, tracking the VIX for positional as well. I use VIX for both intraday and positional. Positional, unless and until it goes below 15, I don't want to I want it to be a long-term investor. At the same time, intraday, if the VIX is shooting up, again the market is moving up, that means I'm getting some shots coming up in the higher level. I don't want to hold my positions towards the end of the day. Same time, the market has been continuously moving higher and the VIX has been falling continuously. That is giving me a clue that shorts are not adding any position. It's the longs who wanted to add more position. They are trying to take the market higher. On the other hand, if you see a zigzag move on the VIX, I just ignore it for the day. I don't carry VIX as a component. I ignore it, consider other elements to do that. So what is the clue which I'm getting it here? Based on this last 1 week or so, though the market has been falling continuously, I'm not seeing the new high getting created on the VIX, which is suggesting me there is not additional selling pressure which is coming in or fresh set of shorts who wanted to add more positions. That's the clue. And coming back to the the Bank Nifty, I've just added it during the live market. Bank Nifty has a component which is the one which I will be trading 90% of the time. The Bank Nifty is going to be giving you an opportunity to know whether this guy is going to be following the Dow and the Nifty together or he is going to be playing a different game. When he will be playing a different game? He will be playing a different game when the crude and the USD INR comes into the picture. Why the crude and ISD is going to be USD INR is going to be very important. Bank Nifty is going to be directly imported with so many things, right? The data point is going to lead to, sorry about that, again. Okay. Check. So the Bank Nifty is, check. I need to reduce. Check, 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 check. Got it. Thank you. Okay. So the Bank Nifty has a correlation with the bond yields and then the USD INR. Why all these things are correlated? Imagine once the crude prices goes up, automatically the rupee depreciation is going to be happening because we needed to buy the dollars and importing them and other things. Exports, IT is going to be a sector which is going to have a good time. Then If the bond yields are going up due to the crude cost and other things, automatically RBI will come into the picture. They wanted to raise the interest rates. Once they raise the interest rate, it is going to impact the bank's balance sheet. And because they needed to lend, and the lending is not going to be happening the same way it is going to be. All these things are correlated. That's the reason we have given you the crude and then the USD INR along with the Bank Nifty, combining with India VIX and the Dow futures here. So if you are able to and just look at the charts here for an intraday basis, you don't need to look at in the entire world setup also. Here the basic guidance of how you can expect the market to move. Basic thing is going to be there only on this particular chart. Now moving on. I have an interesting feature called connecting dots, which I will come into the end. First, I will go into the future analysis. What is this future analysis is all about? This future analysis is all about how the OI data is getting created for the FNO. This is for the Bank Nifty future, for the current series, how they have created the position. If you are looking at this, the total OI at the morning was 26. This was a cumulative OI for the current series, which has been getting added up for the whole, from the start of the series. It was at 27 lakh in the morning. What we have given here is every 15 minutes or 30 minutes or hourly, how much of OI is getting added and who is dominating it. How many of you are good boxing fans here? How many of you like boxing? Okay, good. I see at least a couple of them are liking boxing. What happens in the boxing round? Me and Pradeep are in boxing today. Okay? So Pradeep is boxing with me. 3-minute round, right? I give a knockout in everything on the first 2 minutes. But you came back pretty strong in the 3rd minute. You give me a knockout punch. I'm done and out. So what is happening with the OI? OI is also similar to that. When you're looking at the data here, the total change in OI in the last 15 minutes is 2,31,000. But I've given you a short build-up. Why did I give a short build-up there? The price during that particular 15 minutes, the Bank Nifty, which was trading at 33,039, it went and closed 32,832 with a price fall of more than 200 rupees. What has happened? The shorts have created the position and the price has fallen by 200 rupees. That doesn't mean the entire quantity that was created during that period was a short build-up. It is like in a boxing round where I was confident of 2 particular minutes. In the opening 2 minutes, I was giving all the knockout punch. But in the 3rd minute, Pradeep came and gave me a knockout punch. That means I would have pumped in 50K volume in the first 2 minutes. Pradeep has come in the last 1.5 minutes, gave an 150K volume, pulled the price lower. So whoever gets that round is going to be shown as the guy who has won that round. So if you are looking at short build-up as in a 15-minute, but if you go and look at it on a 3-minute time frame, you will see long build-up happening, short covering happening, a short build-up happening, and so on. Always I look at the data in a larger time frame to get for a trend for the day. Always look at the larger data to get the trend. Smaller data will give me an opportunity to scalp. So in this scenario, in the opening 15 minutes itself, the game is with the bears. They are saying Shiva, we have taken a complete control. We already taken a gap down of more than 1,400 points. In the next 1 hour, we have also taken another 200 points lower. So these guys have absolutely controlled it. Whenever they are taking it higher or lower, I have highlighted one yellow column on the volume, right? Watch out for that. Why? If the move is not happening with the volume, you can always take it back and pull it back. Always remember, the smart money needed to put in more money on the direction which they wanted to take it. If that is not happening with the volume, you can always see and pull back happening pretty fast. In case, if these guys have done it, the opening in 10 lakh volume was there, and then the next 1 hour we had in 12 lakh, 55 lakh quantity which got traded, then the question is, was there any additional volume during intraday which was more than this first 1 hour action? Nothing. When was the action which has happened to beat that volume? It was around 2:30 to 3:30. And who won that round? I've given you in short build-up, short covering, and long unwinding and other things, right? I'll just give you a brief explanation. Long build-up means someone building a position who is expecting the market to move higher. That is called as long build-up. Short build-up, someone who is building a position thinking that the market is going to be going lower, I can book a profit at a lower level, I will short it. Short covering, a guy who has shorted in the morning, who wanted to cover his position because either he would have wanted to book a profit or fearing that there is going to be a significant up move, I will book my losses. It can be a two possibility on the short covering. Fourth one, long unwinding. Either you would have bought it in the morning at a lower level, you will be booking a profit, or fearing that like when shorts are coming into the system, I bought something but the price is going lower and lower, let me book my losses. These are the four possibilities which is going to be there. The whole day the shorts have been building up the position. Short covering happened, long unwinding happened, but towards the late end of the day, we saw a significant rally of more than 300 points. And that didn't happen without the volume as well. It happened with volume. I always believe whenever there is a particular setup is moving in, either a short build-up or a long build-up, there need to be someone on the counterparty to give me that move to take it in their stride. The whole day the shorts were like in trying to build up the position, but end of the day, the short covering or the people who were trying to build some long positions came back towards a finale. Okay? Now the game is going to be for tomorrow. Look at this on a 15-minute time frame. Between 1:30 to 2, like in almost everything was like in a short build-up. But whatever the short which were built, they were completely covered in the last 40-50 minutes, which was a huge short covering. One thing which I always look at here, how the short covering happened or how the short build-up is happening. With 2 lakh quantity, if the price is moving 100 rupees, okay. With 10,000 quantity, if the price is moving 300 rupees, where is the demand and where is the supply? I needed to create 2 lakh quantity to move the price by 100, whereas with 10,000 quantity, I'm able to move the price by 300. In the first one, there is a demand, and the second one, there is a demand. Second one. Good. When a market is moving either on the upside or on the downside, you always needed to watch the demand. Here, the demand created, the price is also moving, and it is exchanging more hands. Many people ask me a simple question. Shiva, the OI is only, like you are seeing the OI data, it is 33,000 and 86,000. How come the volume can be 14 lakh, 15 lakh? Why the volume is more, but the OI has not changed much? OI, in fact, gone into the negative, right? Why the OI has to gone into the negative and the OI volume, like the quantities keep on increasing? I'll put it in a simple term, in an easy term to understand. Imagine I am the RBI. I'm printing a 2,000 rupee note. I'm printing a 2,000 rupee note. I'm sending it to the bank. Bank is depositing in the ATM. As Ashish is like a customer, he is coming and withdrawing the 2,000 rupee note. The 2,000 rupees note is like gone to a shopkeeper. The guy who is sitting there, he is the shopkeeper. He is selling some product. He is collecting the 2,000 rupee note. He again comes and deposits into another bank. And this guy again wanted to put it back into the bank, like an RBI, because that is going to be the game wherein they wanted to deposit the money. It is an entire cycle. The one note only came out of the window, but it has gone to almost 5-6 hands before going back into the RBI vault. That is what is the volume. The one note which was created by the RBI is the open interest. So it's a simple one. The same note which will go several hands before it goes back into the vault. That's exactly the volume which you are looking at here. Now, what we have also given here is, in a simple term, you can see the data for the current month, next month, and then the far month. But I will be mostly using it for the current month because that's where the maximum action will be happening. Here, we have also given you not only for the Nifty, Bank Nifty, you will be able to see all the FNO stocks, whatever that is available as on a date for the FNO, you will be able to see the data for each and everything. This OI data is like in a basic analysis to know who is controlling the market. I'll just show you an historical data. On Friday, what happened? This was the Friday data. In the morning, there was a huge long unwinding happening. Long build-up happened again. Can you see the demand and supply there? The first two long unwinding happened with like in a small quantity, 24,000 and then 14,000. The price was falling more than 500 rupees and 200 rupees. But The long build-up, they were creating 57,000 quantity, but the price moved only 20 rupees. What is the clue you're getting it there? Should I do a sell on rise or should I be in buy on dips on that particular day? Sell on rise. There was no demand at all there. In spite of so much of people buying in, the price is not moving higher. That means someone is trying to buy it, but they are not ready to pay a premium to buy that. They are saying like, if you're ready to sell it at this price, I'm ready to buy. I'm not going to be buying it at that price. That demand is not available. Then can you see what has happened in the next 30 minutes or like in 1 hour? With 57,000 quantity, 182 rupee move. Once you create that fear in the short seller's mind that you're covering so much of quantity and the price has moved, instead of 26, it has almost moved 182. The same quantity has happened. But here the demand has been created. What has happened the following hour? Once that fear has been created that the sellers, that these guys are trying to take this market higher, all the shorts came into the picture, they started to cover. Once they started to cover, the price went 639. And one more thing, you see the highlighted yellow number on the volume. The second hour, huge number on the long unwinding, which was suggesting that these guys wanted to take an exit. But what has happened prior to that? A big volume has happened on the short covering with almost 14 lakh quantity. That means everybody wanted to be on the side wherein they just wanted to take the market positions away. But that particular day, the Dow also played a role in the second half. The Dow literally crashed almost at 130. And that's the reason you didn't see a short build-up happening towards the late end. You saw a long unwinding. That means the guy who were holding it, they felt, okay, we got almost 1,000-point recovery. Let us exit our profits. Let's not hold any position for the weekend. We do not know whether it is going to be a long, a gap up or a gap down. Let me book my profits. Whatever that they were able to do at 600, 700 or 800 points, in the next couple of hours, everything came to the flat territory. The long unwinding, never be as a buyer when the things are falling like that. Never ever get into a buying aspect once the market are falling, then you will be getting trapped. You will be giving an exit for someone who wanted to take an exit. Never do that. That's the most important element. So here, we have given you an options for 5 minutes, 3 minutes, 15 minutes, and 60. And all this data, you will be getting it in the live market. So everything is going to be updated real time, which will be available to you. Moving on, in case if you are a chart lover, I don't want to see it in numbers, I wanted to see it in chart. We have given you an option to decode the data, how intraday data is been moving in with the OI data at the bottom and the volume as well. So here, you get to see what is the volume, what is the open and high on that particular candle. You will be able to track each and every candle, what was the open, what was the high, what was the low, and how much OI got added at that particular time. Everything along with the volume bar at the bottom here. Moving on, the OI spurts, one of the interesting ones. I told you about the long, in the 4 quadrants, right? The long build-up, the short build-up, the short covering, and then the long unwinding. This particular tab on the future OI analysis is going to be giving you a clue. Which are the ones where the market participants are long, short, shorts are being covered, and where the participants are exiting their position. In today's market, looks like MRF has done a very good day. Along with all the metal stocks, they have been having a run in the last 1 week or so. We have VDAL, NMDC, SAIL, Balram Fruit Chini on the sugar sector. All these guys are doing it. Here, one thing which I wanted to see. If I wanted to become an intraday or a positional player, I will be normally looking for both the percentage change in terms of the price and also on the OI. Both needed to be going up. Why? If someone wanted to build a position, okay, they will not be only looking to getting it covered from the short covering guys. They also initiate a positions. And whenever you see the percentage, price moving along with the OI build up, that means there is a fresh set of people who are coming into the system who wanted to take this particular stock higher. Tell me a stock in the last 1 week. I'll show you an historical data of that particular one, how the price has been moving on that one. Any particular stock. Which stock you guys wanted to track? You need to be little louder to me. Sorry? Mind tree. I didn't see much of action happening in the last 1 week or so, except today there was like a short build-up which has been happening. Initial 2 days after the rollover, looking at the data on 28th, there was a long build-up. The short build-up came in for a couple of days, but this doesn't enthuse me. You wanted to look at the chart of VDIL, Vedanta. What has happened in the last 10 days? Do you see any shorts getting built up in the system? No. And one interesting thing is which has happened is the price from 338 moved to 352, 369, 377, 384, 362, and they are not letting it fall below the previous day lows. Somehow they are protecting at least the 370 levels. And what has happened to the, look at the OI there. Every day at least 4 to 5% of OI is getting created. There was one day wherein the OI got unwinding, which was the date. And that is the day wherein you are seeing almost 22 rupees or a 5% fall, which happened on 4th. This is going to give you a clue where exactly they are building up the position and till which level they are trying to build it. And I will be using this particular tab mainly to get my positional trade. I'll just show you for an ICICI trade. This particular tab is enough when you are going to be doing a trade for the an expiry. I'll show you how I analyzed an ICICI bank trade. This will give you a clue on how you needed to be decoding this data. Okay, look at the date from 1310. This will be one interesting area. If someone can decode this, you will be in for a best trade of your life. I'll give you a simple logic here. Watch it on 13th, a big short covering. Okay, if you look at the price, it was at 711.90. The closing price is 711. You see the LTP, that is the closing price, 711.90. There was a short covering for 8,59,000. Next day, from 711, it closed at 728, and the OI short covering again was 11,78,000. What does it mean? Why the shorts are covering their position? The result was coming in on the 22nd. The result date was 22nd, and the shorts were covering their positions on 12, 13, and 14, and so on. What is that? You and me doesn't know that these guys know it. The result was coming in on 22nd, but these guys are covering their position 10 days before that. And just look at the short covering and look at the price action there. None of the days the price would have closed below the previous day's close low. 711, 728, 746, 747, 748, 757, 759. On the day before the result, every day they went intraday low, but they ensured that they don't close below that level. The operators were clear on the game. They just wanted to close it above. And none of the days have the shorts. I will go into this an expiry day. The result day. When I know that these guys haven't created any shorts, what will be my biggest question? Do you think they wanted to take the market lower or this particular stock lower or higher? Because you don't have any positions to take it lower. There is no game for you. Indirectly, if you would have seen that particular month, the current month they were doing a short covering, the next month series they have been building up long positions. The OI gives you the clue. And the bigger clue is none of the days they were closing it below the previous day's low, which is a big clue. Once, very rarely you will be getting to see this kind of data. We just went on the 760 call on that particular day. It gapped up, gave me 140 or 150% opening itself. If it would have holding on, the trailing stop loss got hit. But it went all the way to 250 to 300% within 11 o'clock. Simple logic. You don't need to do anything. Just a simple OI data combining with the price, you will be able to get that clue. Only thing is, we needed to scan these stocks where exactly these are the moments happening. We will be coming up with a scanner as well for this. These are the trades which is going to be giving me the clue. On the same day, I think the Reliance also came the results on the same day, on that particular weekend. If you'd have gone and looked at the Reliance, it was completely a different picture altogether. I'll show you that as well. Then you will understand why I took the trade on the, when ICICI didn't take a trade on the Reliance. This is on 1310, right? Can you see what has happened here? One day the shorts were building up the position, next day like in longs were building up the position, the third day like in short build up is happening, the fourth day the long unwinding happening, everything is happening. Then in that scenario, on this particular day, if you are holding a call or a put, expect only the premium erosion, don't be a buyer, instead be a seller, because this is mostly, there is a seesaw of battles which is happening between the buyer and a seller. You are not going to be gaining anything on that particular day if you are a buyer. They know how to adjust their positions. Purely, whatever the positions which was there in the options market would have been a hedging. They wouldn't allow you to enjoy the premium benefits which you are expecting out of the results and other things, which is not going to be happening at all. Always remember, either be a short, either be a long. We needed to see a continuous momentum. By end of this last expiry, I was telling you about the like an HDFC Bank. I don't know how many of you tracked the HDFC Bank for a week. Have you done that? Okay, look at this data. Don't look at 25th. The pure reason is it was a rollover data. That's the reason it is giving you a different volume altogether. But look at what has happened on 28th and 2nd. Focus only on the OI column. I have created an hefty positions on that particular day thinking that why? The usual OI turnover on like if you look at the historical number on that particular stock was around like in 15, 20, not maxing out beyond 20. On 2nd, they have created 4x of the volume. It is almost 65 lakh quantity got created. And imagine if I am a seller who is creating that much of quantity, I would require a follow-up and I'm not going to be like happy with 10 or 20 rupee profit. That was evident, and they have created a positional short from almost 1,450 odd zones, almost 150 point. Fall has already been there, 120 points minimum. If you are thinking about this, watch out for ICICI Bank. You will see a similar pattern on the 2nd, wherein they have already created the quantity there. If you look at this kind of a volume, it would not have been like impossible on any other days. They were not adding these volumes except on certain stocks on certain days. Once they know that this is the weakling which I wanted to hit it, the first thing which they will do is go and create the positions in their favor. The shorts have been building up the position. Every day you're getting to see 3, 2, and 1, and then today was the biggest one with a 5% fall. Someone who were expecting that ICICI results were like an absolutely bullish, that is the best result in the last century or so. But the ICICI stock has been falling continuously from 850. They don't care whether the company performs or not. They know this is a stock wherein I will be able to maximize my profit because everybody is bullish over there, and that is the area wherein I can attack. That clue can be like taken from the OI data. So use this EOD OI analyzer along with the futures chart, understand how the intraday move is happening, how you can look at the positional, and how you can look at a particular stock. Imagine now, I'm looking at all these stocks, right? MRF, VDIL, and Balram Spurchini. Just go and look at any one of these stocks to understand whether it is a one-day move or whether it is a significant move which is going to be expected. What are you looking at MRF? Though it is like in a low traded, like in a illiquid strip, Do you think I wanted to continue taking a long position looking at this data, EOD data? I wouldn't be. It's been a mixed picture. You have a long build-up, short build-up, long build-up, continuous like in a couple of days of like in a short build-up. Again today a long build-up. This is not going to be giving me, that means this stock can be operator driven. One day it can go up, next day it can go down. We don't want stocks like this. Always look for stocks which is going to be happening with a big move along with the OI. Yes, please. Yeah, that is the rollover data. That's the reason the new expiry. So the rollover data is happening in every month. So they would have carried forward the position. That's the reason you see a big OI on 35th. Yes. Yes. You have an option here. What you needed to do is just click on the show cumulative. It will add up all 3 months put together. If you want independent, I wanted to see only for 1 month. Current, next, and then the 5 month. What we have done is we have given you both. Fraction of a second, you will get the data for you. Okay, so we have seen the future, the chart, and other things. The OI bus is like in a heat map kind of a feature wherein you wanted to know which are the stocks which is like in the heat map today. The ONGC is like in completely under the short covering. And then the Coal India, the Hindalco, all the steel, and then the telecom has been like in shining today. You will be able to get to see the advance and declines along with the high and low of that particular script. Also, you will be getting to see the OI buildup which has happened, whether it is a long buildup or a short buildup. All those things can be getting at a glimpse. If you wanted to see for only the banks, you can just choose the Nifty Bank because there are people who trade only on the banks. You will be able to get the data here. So it's a pretty simple one. You should be able to understand the data pretty much easy. Now the most important one which I'm going to be showing for the cash players. How many of you just play in the cash market here? Okay, our Kapilji is playing. Okay, there are a couple of others in the bank benches as well. Okay, so this particular feature, it is going to be giving you on an intraday, whenever there is a stock in the F&O space, whenever it is making a new low or a new high, you will get to see that. But one interesting addition which we have done is, we have done some scanning and other things, and based on that, we have given you a breakout days. I'll give you a simple clue. How many of you are looking for 1% intraday here? Wow, I see good number of hands here. All you needed to do is watch for the stocks which is having a minimum breakout days, either on the upside or on the downside, 8. Once it is giving you a breakout above 8 days high, just go and chase that stock for 1%, either intraday or positional, you will get that. 90% of the time you will get that. Go try it and let me know after a month whether it is working or not for you. Okay, I have given you that breakout days here. We have done some back testing and other things. It has given us some simple like significant moves. Here, looking at the ONGC and then the Balram Chini and the Gale, all these guys have done almost 8 to 9 days high. Anything above the 8-day high, I can at least 90 times out of 100, it can give us intraday move above this price 1 to 2 in the following day itself. Similarly, go on the same one on the downside as well. And other interesting clue which I will give is, if the 8-day high is happening with the long build-up, that is very good. If the 8-day low is happening with the short build-up, that's very, very good. If it is happening with the short covering or long unwinding, then be careful. This is a simple clue. Just attach this one only. That's the reason we have given you this long build-up and then a short build-up. One more clue also I'll give you. I told you about the open and high concept, right? And I told you only to focus on the index futures and options. When it comes to the stocks, just apply the ulta. That means open and high means sell, open and low means buy. What is that which you are seeing it here? Open and low on the call side, like in long side or on the short side? You see a stock which is called as VDIL with the open and low? That means you need to buy. Do the same magic what we have thought in the an index, opposite here. Why they needed to do this? That is a clear indication they are long on the futures and option, they are short on somewhere else. If they are long here, they are short there. It's a hedging. Pure simple magic. Easy way to identify, and we have given you that clue over here. Moving on. I'm a bank lover because I trade mostly in the bank nifty. Someone who wanted to know how each of these 6 banks, these are the 6 guys who is going to be making the market move, right? Either on the upside or on the downside. Today, if you would have seen it, and I'll just show you on the chart, what was the bank nifty contribution. So which are the 6 banks which has contributed today? ICICI contributed 360, HDFC 264, Axis 243, SBI 169, and Indus 156. Kotak is the last one which would have given you a 75-point move. 90% of the bank nifty move is going to be based on these 6 banks. Someone who was asking me, why should I be tracking this? What is going to be the importance of me tracking the underlying? Now I know how much points each of these banks can move in a single day and who's going to be giving the maximum move. So which is having the maximum weightage in the bank nifty? HDFC Bank, everybody knows it, almost like in more than 30%, right? So that guy is almost in the bottom 3. That is clearly indicating to me HDFC is also like in giving me a big push. This bank nifty like in contribution, this is currently not available in OI Pulse, but we are trying to get this also in OI Pulse. Currently TradingView doesn't allow us to do that, but we will figure out a way to add this so that you guys get to see how the bank nifty contribution is happening in real time. And as the price is moving, whether the short buildup is happening or a long buildup is happening, I will get the clue here. So this is also going to give you a perfect clue how you will be able to take a trade. If you are looking for a positional play, use 15 minutes and above. If you are looking for a short-term scalping and other things, use 15 minutes and below. Anyone who is using scalping, use 15 minutes and below. Long-term players, 15 minutes and above. What is the trend you are getting to see? You see more of red or more of green today? Almost every bit of the information was red except 230 to 330. Forget about 330 to EOD. That is like an adjusted rate for the last 30 minutes, whatever that they would have done post-closing. Forget about it. We will tick only till 330. Between 230 and 330, what has happened to all the banks? Everybody were on the long build-up. There is some expectation or a buzz created that market is expecting a gap up and we all will be buying the banks. In the futures, we saw short covering. In the banks, it's all long build-up. It's a combination effect. The futures is going to be moving higher and they are creating the positions. I'm connecting all one by one. So slowly we will connect all the things, whatever that we are going to be looking at. Now, we have seen the EOD analyzer as well. The EOD analyzer, you can look at for the individual stock, what has happened on that particular stock for the last 100 days or 200 days, wherever you wanted to see the data. We have given the data here. So you should be able to see the data for the last 100 or 200 days. The entire data is available by EOD. Okay. Team, I hope everybody would have had dinner. Otherwise, you can pick up a plate, come inside because they are going to be closing the dinner shop. Great. DJ, can you arrange some tea as well in the late night? Thank you so much. Another 30 minutes? Yes, 50-50. So now we have covered all the aspects in terms of the futures, how the futures market plays. Now let's get into the option segment. I'm a trader who looks at the future data to trade in the options. Why? Without the spot in the future, you may not be able to trade in the options, right? If these guys are not moving, that is not going to be moving at all. So options has a major role from the futures and options, like in futures market. If the futures doesn't give me an indication whether it is going to be moving higher or lower, I may not be able to play it in the option segment. What we have done, whenever you select the OI analysis, by default it goes to the at the money. Okay, that is where the maximum action will be happening. If you look at this data, I have given you the call OI, the total OI, LTP, the change, and then the OI change. The most important things as a trader, if you are an FNO trader, the key things which I want you to look at is change in price, change in OI from yesterday. Don't look at the total OI. Through the week, I would have created plenty of positions and other things. If I wanted to trade for this particular day, I wanted to know what is the position that these guys are creating. That is where the maximum action is going to be happening. Don't look at the historical data. Let it be like an even 1 crore open interest created. But at the end of the day, if they wanted to do something, they should be creating it today. And that is where the maximum action is going to be happening. But yes, there will be like something which will be happening based on all the collective OI. But in case if I'm creating more positions today, that's where I wanted to focus upon. Here, I'll give you a simple clue. Look at all the things here. Imagine if I'm a seller, what I will be doing? I'll be selling a call today and then buying a put because I'm selling the futures. They did the same thing. The price from 760 went to 675 and then it moved again to 796. The whole day the market was like consolidating in a range, though it fell. But they were not letting it to fall. Why they were not letting it to fall? The price should have been keep on moving lower and lower and they should have closed it at the lower level. Why they were not able to do it? If you remember our open and high concept in the morning, imagine if I'm a guy who would have put in 500 crores, I wanted to defend it. I don't want to give up so easily. Imagine if the market would have closed below the VWAP level, who's having the control? The sellers are having the control. If it is closing above the VWAP, the buyers are having the control. Whole day the sellers tried everything in their book to take the market and close it at the day's low, which they couldn't do it. In the second half, all the buzz about like in the UP election result, the exit poll coming out, and then the crude falling because of like there was a news which was circulated that Russia was ready to offer 25% discount, and everything has a role to play. That would be like playing in the minds of the investors, and that's where you saw the short covering which has happened in the last 1 hour. The price again went from 665. It went and broke the day's low of 620, and then it came and closed at 759. But on the other hand, what has happened in the 230 to 330? When you're looking at this data, don't look at only one side of the story. Always hear both sides of the story. If someone is creating a position on the sell side, we need someone to create the positions on the long side on the other side. Imagine I'm a seller. What happens in the options market? Who are allowed to create a position? Both buyer and seller are allowed to create a position? How many of you believe so? It is the sellers who are the ones who can create the positions in the options market. Only in the future segment, both buyer and seller can create a position. Why? The upfront margin is collected from the sellers, not from the buyers. Am I right? Is the margin is getting collected from the sellers or from the buyers? It is only from the sellers. That's the reason buyers say like 90% of the buyers lose money in the market. Why? The pure logic is, if I am a seller who creates a position, I don't want to give it to you on a loss. Imagine you are going and buying a TV in a showroom. Okay? You are buying an LCD. Once you come out of the showroom, next day you take it back to the showroom. Are you going to be getting the same price at which you bought it? The depreciated value, like in 1 day or 10 days, they don't care. Sir, we will not be able to take it. You can put it under an exchange. When you bought it at 1 lakh, we will take it at 40 or 50K. Correct? That's exactly the seller's mindset here. They are going to be selling you a product thinking that this guy is going to be coming back to me at a later date because I know I've given him an option to use it till the end of the expiry. If you are able to sell it to someone at a higher price, it's your luck. But I don't care. You have an obligation to me, come back and sell it, give it to me by end of the expiry. By that time, my time value and other things are going to be playing a role and I will be able to enjoy the premium. So if someone who's buying, say for example, 32,900, what is the hope for this guy now? 32,900 call is trading at 758 and then the put is trading at 651. What is the probability of a guy who would have bought the call and the put winning by end of the expiry? It's very minimal, right? How many days to go? Another 2 more days to go. Tomorrow is, 3 more days to go. Tuesday, Wednesday and Thursday. Why the premiums are high? Because of the the elections and then the Hy-Vee and the VIX volatility and other things. But there is a buyer who is ready to buy it at 758. There is a buyer who is ready to buy it at 650. Why? He feels not only the market is going to be moving another 700 points from here, I should be able to see another 100 or 200 points for me to book the profits as well. That is the expectation of a buyer who is buying in the product. Either be a call or a put. But they don't realize they're fighting against the time. Why that volatility and all these things play a role? He feels that there is going to be a huge volatility. In a normal market, you guys have heard about the onion story, right? Like in 1 year back, we normally cook onions for our food every day. What is a kg at which we buy it? Anyone who has been shopping onion recently? What is a kg per price? 35. Perfect. 1 year back, there was a big supply crash and other things, and then what was the price at which you bought it at that time? 150. Anyone 200? I bought it at 220. Again, 200, 220. If you'd have seen the same premiums 1 month back or 2 months back at the money on Monday and Tuesday, it would have been trading at 120 or 200 or 300 rupees. But why it is trading at 600? When the seller knows that there is a demand, he is making sure that, anyway, I'm going to be under a big soup. Imagine if I'm wanting to sell this product, whatever the market moves another 1,000 points, I will be under soup. I needed to protect myself. Let me put a quote at 650. If these guys are coming and ready to buy it, let them buy it. If the seller is putting in value and if there is a demand, the price is going to be keep moving higher. And how we can correlate it? You will be able to correlate it with the IV values. I'll just show you a brief idea about the IV values before I go into this, so that you will get a clue what I talk about. You won't just get this IV values anywhere. These are based on my experience, what I've observed it over a period of time. This IV values is going to be making a lot of sense when you are going to be looking at the data in a certain way. What I observed over a period of time, when the IV values are around 10 and 10, you will hardly see any premiums attached to them. When I say premiums attached to them, at the money would be trading with 10 or 20 rupee premium. The same IVs, once it is going above 40, you will see a significant increase in the premium price. You wanted to see that? I will show you that. Always when you are looking at the IV levels, do you see the column here? I will be calculating the IVs or looking at the IVs only from at the money 3 strikes above and 3 strikes below. Why? I told you in the morning, that is where the maximum action is going to be happening. Don't look at the deep OTMs or don't look at the deep ITMs. The volume is not going to be there. Either it will be in screwed numbers. Let's not look at it. What is an average here? On the call side, it is around 59.7. On the put side, it's somewhere around 56 to 59. 60, I will take it as, consider it as 60. When you have both the sides, IVs are playing at the same level, give it to the writers. You cannot do anything when the writers are going to be dominating it. How will I get a clue whether the writers are dominating or whether I will be able to buy it? Always you needed to look for a 10-point difference. I don't want a normal 10-point difference. I want the side where the market is moving, where the IV needed to be higher. What I have done is, over a period, I have observed how the IV play has been happening. Imagine there is an IV of 10 and 10. That is a low IV. If you are looking at the money, it will hardly have 5 or 10 rupee premium. Why? The seller says, Shiva, no one is coming and buying even at this price. At least I needed to make 5 rupees. Come on, buy it at 105 at least to me. The same guy, when the IV is around 40 and 50, he will be demanding, he will be in a commanding state. Guys, if you wanted to buy it at 200, you buy it, otherwise I don't care. There is a buyer who is coming in at 220. That attitude will be there at the higher levels. What I wanted, I don't want the IV levels to be same on both the sides. Whenever you see the IV levels from date beginning to day end, that means it is completely dominated by the sellers. You will see an intraday spike here and there, but the whole day you will see a zigzag move happening, only the premiums getting adjusted. Was it not being done today? What has happened to 32,900? You wanted to see the straddle for 32,900 today? It opened at somewhere around 1,500 range. It went to almost 1,250, went again to 1,500, and went and closed at 1,320 odd levels. And towards the late end, who won the game at last? The sellers who were selling it. These guys know it. At every higher level, I will do the adjustment, bring the price lower, and they brought almost to the day's low, and then closed it, aram se, enjoyed it. That's the fun when you have the IV levels, both the sides matching. What I wanted it. As a buyer, I need something to my cushion, right? How I needed to make use of it. Whenever you see the IV levels, 25, 25, 28, 28, 30, 30, maybe 1 or 2 points here and there, you will see mostly premium erosion. I want the IV to be at least 5 or 10 points higher on the side where the market is also moving. Imagine today if the market is moving on the lower end. I want the call side IV to be 20 and the put side IV to be 30. Or call side IV to be 40 and the put side IV to be 50. What is the correlation? Again, similar to VIX. In the VIX, if the VIX goes up, I told you about shorts coming into the picture. Just ulta here. If IV goes up, that is an indication that the buyers are ready even to buy it at any crazy price. More the IV spike, more the buyers are coming into the system who wanted to take this particular position on a particular side. You wanted to see how the IV spike is happening and how the price is moving. I'll just show you so that you will know, okay, this makes sense. I didn't look at the data that way. What I have given you is an IV chart. I'll just show you for Friday. The whole day, the IV levels in the morning was somewhere around 38 on the call side, 46 on the put side. Okay? Look at this. Towards the end, somewhere around 12:30, the IV on the call side was 37, the put side was 39. And as the market was going higher and higher, what was the IV going there? The call IV was 36, put IV was 41. If the market is moving higher, where exactly the IV needed to be higher? If the IV is not higher on that particular direction, what's happening then? Why the IV is not moving on a particular direction? The reason is someone is exiting their position. When the IVs are going lower and lower, it is a clear indication that the sellers are controlling that particular side. It's not the buyers. Once the sellers have the control, the clue is going to be on the IV. If the IV is going to be going lower, in spite of the market moving higher, that means at the higher level, the call buyers are booking their profits. And what is happening with the put IV there? The smart money is creating a position. Many people think the smart money only creates a position on the selling side. What the smart money is doing here? They've been creating the position on the put buy as well. If you see the IV on the put side, as the market moving higher, they've created a position. We got a 5-point difference. And what has happened in the second half is an history wherein you got to see like a 400, 500 point fall from the higher level and they made money. So indirectly, whenever you see a particular side, if the market is bullish, and I would love to see the IV on that particular side being higher, the reason is that's where the call buyers are coming in. If you are a buyer who wanted to know when to chase it, when not to chase it, imagine today you are getting a gap of 500 points. But the call side IV is only 20. Put side IV is around 30. Will you go and try to attempt to take call? Even in spite of market moving another 100 points, your premiums will not move more than 5 to 10 points. And how many of you have experienced that many a times? The market bank nifty has moved 2%, but my premiums are not moving at all. How many of you have experienced that? Have you ever realized that why it is? It's purely because the game is controlled by the sellers, wherein they don't realize that they don't want to give you easy money. They know that, okay, you guys are at the mercy. We will start creating more supply if you are trying to buy a call on that particular day. The futures will be moving, but you will not be seeing the call prices moving higher level. You will be surprised on those days. I am a victim of that in many a times in the past. I'll show you certain examples as well. This used to be the data when I used to track it in like in a Zerodha platform. Yeah, DJ. No problem. You continue to do it. No worries, no worries. My noise will be much bigger, don't worry. Okay, so here, on this particular day, the Nifty was falling almost like 150 points. If you look at the IV on the call side, it is around 48. The put side is around like in 61. Still, you are not able to get it. That's the reason I tell people, if you are an option buyer, stay away from the market if it is going to be above 40 IV levels. That's the best time for you to take a vacation. You are not going to be, yes, you will get an odd move. When the market is moving in gap up and gap down, you will be able to enjoy it. But intraday, if you are trying to find someone who's playing for intraday, who's looking for a large opportunity, if you are a positional player, you are fighting against the odds. Your probability of winning is going to be like in 1:10 or 2:10. That is going to be a highly risky game. This is one scenario. And I'll show you this. On a day like this, when the like in a bank nifty has fallen more than 2,000 points, you are able to see a move of more than 2,000 points on the like in call side. But on the put side, you got to see only like in 40 or 50 rupees given to the buyers or like in the sellers over there. Who won the game still here? Many people think when it is a big gap up or a gap down, the sellers are going to be literally losing money. It's not the case. They know how to do the adjustment. They are going to be taking the maximum away from you on the call side. They will not give you much on the put side. They take 90% away from you, give you back like in 50%. It's like in a casino. The casino always wins, right? Like in they take 60%, give you back only 40%. That's exactly the sellers are doing to you. But we don't realize that. Many people think that, no, Shiva, I will be able to play on any IV levels. I don't care. In the PPT, I have clearly mentioned to you, do not even chase if the IV levels are going to be above 40 and 50. That's not the game for the buyers to make money. What is the maximum IV levels you guys have seen? Look at this particular example. This is during the 2020 carnage period on March 17th. At the money for Bank Nifty was trading at 950 bucks and the IV levels were around 150. 950 on the at the money. That means in couple of days this particular script is going to be like an expiring. Both the sides 1,800 rupees. Who is having an easy money here? If I am a buyer, I need not only a 900 point move to make a profit, I need another at least 50 or 100,000 point move for me to make a profit. Does this make sense for a buyer to be there in the market? So who is going to be making the maximum? But still the buyers will be coming in. That's the reason the sellers are demanding it. When the sellers are demanding more and more, if the buyer is going to be keep on showing the interest, the IV is going to keep on spiking. Unless and until the buyer exit, you will not see the IV. Many a times you guys have heard about the word IV crash, right? When did this IV crash happens? During the election time, budget, post-budget, after the RBI policy meet, all these scenarios. What is IV crash? Premiums melt. Why the premiums melt? Simple. If IV falls, what is the clue? Who is exiting the position? Buyers exiting the position. If I am exiting the position, what will sellers do? They will create more short quantity. If I create a demand in the market, automatically the IV will be going lower and lower. No one is going to be interested to buy that. If I'm not buying it, naturally the IV crash and the premium crash will happen. Simple, simple logic. That's the reason you see the IV crash and all these things. And Tuesday afternoon and Wednesday afternoon, have you ever observed the IV crash happening? Especially the Wednesday afternoon? The premium crash one day before the expiry happens big time. Always observe in a normal market scenario. During the course of the week, the IV levels will be like in 30, 40. By Friday, it will be around 45, 50. Monday, 40. Tuesday, 30. By end of Wednesday afternoon, you will see the IV levels coming towards 20 or 25 for the Bank Nifty and 10 to 15 for the Nifty range. Just observe it over a period of time. You will see the same thing happening. I'm talking about the normal market scenario, not like this. Now we have seen the IV levels up to 50. The example which I'm showing you here is 150. I'm just preparing you the worst case scenario also. In case if it happens, you need to know the premium on at the money can go up to 1,000 as well. Currently you are seeing it at 400, 500. Get ready for 1,000 as well. If you are an option player, get ready to play this. And if you are thinking about the Bank Nifty is the one which is giving you the volatility, look at Nifty. At the money for the Nifty is trading at 300 rupees with the IV at around 120 and 130. Compared to Bank Nifty, the Nifty volatility is going to be little like but people say it is like a little lower, but I see a significant amount of moves happening every now and then. Even with the Nifty, the kind of money that's been like pumped in with a huge quantity, you can expect similar volatility. Okay, so this is something which I want you to keep it in mind. Don't try to fight with the market when the IV levels are high. The premiums are going to be higher. The premium crash on Tuesday afternoon and Wednesday afternoon is going to be pretty huge. Make use of that if you are a seller. Coming back here, now you would have understood the game, how you needed to decode the IV data intraday. If the IV is moving higher and if the market also moving in that direction, it's a good sign that the buyers are coming in. If the market is moving but the IV is crashing, that means someone is taking an exit and you don't be like in a prey wherein you don't go and say, come on, cut me. Don't do that. That's the most important thing with the IV to the price correlation. So here you will be able to see that price correlation, how it happens. Coming back, if you are looking at the OI analysis, I've also given you a chart options wherein you can look at in the graphical format to know where exactly the buyers are, where exactly the sellers are. Here I have given you the price and the OI correlation, both for the call and the put. On the higher end, you will be able to see how the OI on that particular day is moving. What is the clue based on this you are able to get it? Please keep in mind, sellers are the ones who are creating the positions in option market, not the buyers. Now you tell me what is the clue which you are getting it looking at this data. From morning, the OI on the put side was higher, correct? Put OI is in the red, and then the green is the call OI. Towards the second half, around like in 1:30, the call OI jumped. And then the put OI started going lower and lower. What is the reason? What has happened towards the late end on the put prices? Everybody did a profit booking or a long unwinding or a short covering. What has happened? Long unwinding. If it is a long unwinding, the prices are falling and then the OI is falling. What is the clue you are giving it to the sellers? Do I wanted to carry a put home tonight or no? You wanted to carry a put home. Then why are you booking your profit? You don't want to carry, right? The price is falling towards a late end and then the OI is falling. Always remember, sellers are looking for a kill. Okay, sellers are looking for a kill, and the biggest weakness and any option buyer can show to the sellers is squaring off your positions in profit. That is exactly the area they are looking for. Whenever a seller sees that a buyer is booking a profit, that means he is not ready to create any further position. That means he is not expecting further fall. If he is squaring off his position on the put side, that means he is expecting a recovery on the futures. He wanted to book the profits, and on the call side, he is also creating some positions at the lower level. This is like in a simple logic which I want you to understand how the correlation happens between the call, the future, and then how they are making the market move. Now, moving on, option chain, my favorite page, one of the favorite pages, wherein I get to see where the action is happening, the real action in the market. Though we have like in several strikes, we don't get trade in all the strikes. We needed to know where exactly the action is happening. Do you see something in blue, something in green and other things? What is that? That's the area where the maximum volume has happened today. On the call side, 33,000 CE was having the maximum volume. Even on the put side, it had a volume of 3 crore, which was on 33,000. This is a full day data. Most of the websites give you the full day data, but I wanted to go in deep and then give you every 15 minutes or hourly to know towards the late end what has happened. If you look at this data, what is your perception now? Looking at this data, your perception will be like, I wanted to carry a short, Shiva, because like in all the calls have been like shorted from morning. I will ready to carry a short. That's the way the game is going to be. On the put side, the longs are there, either a long or a short build-up. But if you just go and look at the last 1 hour data, the picture changed completely. What is the picture now? If I am a put buyer from morning who has been holding my position, if I am booking the profits in the last 1 hour, if it is a weekend, then why should I be covering my positions on the call side? If I am a seller, why should I be covering my positions on the call side? I should be happy, right? Tomorrow, again, they are going to be taking a gap down and then I'll be. This is the big clue which they are going to be giving you towards a day end. Whether they are carrying the shorts home, whether they are carrying the longs home and everything. When they are unwinding the position, the seller will be his eyes will be lit. Look at the money, 651, 758, and they have been continuously writing it, right? I'll just show you a big clue here. Just click on this option chain on whichever the strike which you wanted to. You will be able to see the historical data. This one doesn't have much of volume. The reason is the market has been moving 1,000 points. I will just go and look at 35,500. Now, a simple clue. As an option buyer or seller, I will give it to you. Look at this data. The price has been moving from 2nd March from 2,300. It has gone all the way to 400 now. So who is enjoying it? Every day the shorts have been enjoying it. Yes, return it on 2,300. Next day it has closed on 1,700. The following day at 1,200. Today it closed at 420. Who's having the control? Every day the shorts are building up the position. He is enjoying a 50% fall every day and he's enjoying it. And my simple calculation is I want 50% jump in an OI, 50% fall in the price. Both the parameters are not met on the first 2 days. 3rd day it is met. Perfect scenario. If I am a player who is looking at selling, I would have definitely done carrying home a position here. But I don't want to look at one side of the story. I wanted to see what the sellers are doing it on the other side. What they are trying to do. Look at that here. The price from almost, we will look at from 2nd March itself. 433, 531, 268. 268 is a low. It was closing at 315. The OI change was, a percentage change was 10%. The OI change was 98%. I would have been so happy if the price would have moved 50% and the OI would have also moved 50%. Long build-up category would have fulfilled me. But unfortunately, it is not the case. Next day, there was a short build-up which happened. The price from 315 opened at 258, closed at 269. Even here, they were not able to pull the price by 50%. Though the OI increased, the price was not going lower. There was a fight which happened on both the days. They both were not able to control it. 3rd day, the complete global market scenario, everything was negative. Opened at 546, closed at 346. The price was 28%. The OI was built up. Perfect scenario. Overnight position. Here, I have created a short position. There, I have created a long position, everything. Always remember, it is falling from the high level. From 546, it has fallen to 346 for closure. Today, you got a negative news, a big negative news. That was used by the players. And again, the price went from 346, opened at 501, went all the way to 1,438 and closed almost 30% of the gains given up and closed at 1,000 rupees. And what has happened to the OI? Every day they built more than 50, 60, 70. Did they build big positions today? If I am a buyer, if I am confident that I'm going to be like in getting a gap down, what I would have done? I would have created some more positions similar to how I have been creating in the last 2-3 days, which I have not done. Here, I have created a massive position. From a perspective here, I will be looking at from at the money side. This is like in a deep or like in the money and other things, right? Now go closer to the one where the market is trading. 33,000. 32,800 is the price. 33,000 is the level. This is the game on now. The price has moved yesterday on the put side from 155 to 1,094, closed at 729. This one went from 1,060 to almost from 3,300. It has been coming down steadily. Every day they are making a new low. It is at 652. This one will be valid unless and until I see that the sellers are continuously adding positions on one side and buyers are adding positions on one side. Sellers are absolutely making their like money on the call side. Every day they have been shorting. Positionally they are short. Once they short the HDFC Bank, once they short the ICICI, once they short the Bank Nifty future, they have been writing all the calls. And the buyers have been told, guys, be on the put side every day, you will be able to make money. Today the put buyers are saying, guys, we have been enjoying the profits almost from 69 odd rupees. We have got all the way up to 1,000 rupees now. We got like plenty of money. Now we will start time for us to take some profits off the table. That clue is coming in over there. Can you see what has happened? The long build-up happened. Now the shorts have covered their position. I will give you a simple clue in this. Whenever a short covering is happening, I would love to see that particular side closing it at the day's high. If the short covering is happening, I want that particular side to close it at the day's high. That is indicating only the shorts have covered their position, the longs have not booked their profits. If the longs are booking their profits, you will see a significant fall happening from the day's high. If you wanted to go and look at this particular strike, 33,000, I'll just show you on the OI. Look at this. This is the game on here. I will give you a simple clue here. Look at this 3,74,000 and this 3,51,000. The long build-up happened with 1 lakh quantity. The price went up by 113. Short covering happened 131. And towards the late end, you had a price fall of more than 246 with only 43,000 quantity. Only with 43,000 quantity, the price has fallen more than 250 rupees. What is the clue you are getting it? The buyers, whoever bought it at like a lower level, they are literally wanting, I don't care, now it is time for me to book the profits and get out of the trade. The biggest clue a seller is looking for is the buyer's weakness, which is you needed to exit your position. Once you say, and once you show that you are not willing to take forward this particular area, they go and kill on that. So, as of now, with the data which has been pointing out, every indicator in the book is saying to me, Shiva, they have done a profit booking on the put side. They are not expecting any further fall. Unless and until the global mark does something spectacular. I'm not sure what is the Dow does now. It was falling like in more than 600 points. Yes, go ahead. Buyers are? Yes. Yeah. For the short, but what did I say on the short covering? If it is only short covering, the price will close at the day's high on the put side. Is it closing it at the day's high? Why it will not? Exactly. The spot has moved from 60 rupees to 1,000 rupees, right? If you are a put buyer, what do you do if the price has moved from 60 to 1,000? Correct. Why it moved? No, why? Like, say for example, the future moved, correct? Why the future moved? Someone either should have bought it or someone either should have short it or like, and someone should have done a short covering. If you were thinking about a gap down tomorrow, will you like and cover your positions in the last 30 minutes? No, you are a put seller. You sold the put. Correct. You don't want to take a risk. But is the option prices is going to be moving based on something else? It is going to be based on the spot or the future. The option prices cannot be moving on its own. It doesn't have an underlying, it has an underlying wherein it has to follow the Bank Nifty. Whatever that they do there, it is going to have an effect here. Correct? If the market on the Bank Nifty moves higher, here the call prices also needed to move higher, the put prices has to fall. That's what has happened. But why the call prices moved higher and the put prices falling? Because they have started buying the futures at the lower level. And once the futures are bought at the lower level, what is the clue they are giving it to the put buyers? They are saying the calls are going to be going up because we are buying the futures. That means someone says, I'm going to be long on this market. Automatically, whatever the put positions which I'm holding, guys, they are doing a recovery. Like, and I have seen this market like in moving from 69 to 1000. Will I book my profits or not? That happens. So that's the reason like in the market is like in a game, right? You will see all these things happening. Why did the Friday there was a move of 400, 500 points and then the fall? Even today the same thing happened. The fall happened and then a recovery in the second half. Why it needed to happen? When the entire market was falling today, 500 points on the Dow, when our market was closing, our market recovered almost 400 points. Pure logic is they were expecting something to be coming in on the exit poll, something to be happening on the oil, something to be happening on some Russia and Ukraine issue. Everything is going to be like in playing out in the minds. They wanted to take a position. That's exactly been happening here. Not every time we'll be 100% right. But with the news, if we are able to even get like in 40 to 50%, then we should be more than happy. But as you said, the big money can like make a play to show you that I'm just covering the position. It can be a weekend play, chasing the weekends out and then take the market lower again. Yes, DJ. Sure. Super. Guys, we will take a small break of 10 minutes. The tea and coffee is there. Then we will come back and resume. I hope that's fine with you. How many of you wanted to go up to bed early? Or you wanted to continue the session? Continue? Good. We will keep it going. Now, okay, the option chart, this is like I'm going to give you a glimpse of how the particular option on both the call and the put, in terms of the price movement, you will be able to track it here. Okay, can our man get the screen, please? Okay, great. This is the OI chart which I'm referring to. Even here, you will be able to get some basic clues about like and how you can manage the positions. If you look at this data, can you see what has happened on the call open interest? From around 130, the call OI shoots up drastically, the blue line, and then the price is falling, which is a clear indication that the shorts are building up their position. But what has happened after it reaches the price of 567 at around 150, the OI starts to drop big. What is the clue? The shorts are starting to cover their position big time and then the price started to move higher. The same scenario happening over there on the put side. The big clue is giving you the clue at the higher level. There are two things which I wanted you to notice there. First, do you see this OI falling from a high of more than 3,70,000? Here it has gone to almost 2,29,000. What it has done? OI falling, shorts are covering their position, and the price has moved from almost, this was a level at 691 to 973. It is a combination of quadrant 3 and quadrant 4. What is quadrant 3? Short covering. What is quadrant 4? Long unwinding. It is a combination of both. Once the long unwinding is coming in, that is the clue that the sellers are looking for, wherein they wanted to get into the game. The end game is coming in on the short side. Tomorrow morning, unfortunately or fortunately, if the Dow, in case if this global market doesn't support, let me quickly check what is the Dow factor playing out, where exactly the levels are. I think the market is about to be closing in 1 hour's time. Okay, the Dow is still trading at almost 1.85% down, but our futures is trading at 15,700 odd zones. In case if there is going to be some amount of recovery which happens overnight, we might see a gap up, and that gap up can sustain in case if they wanted to do it for a day. They just wanted to know whether the sellers who have been exiting their positions on the put side, the buyers who have been exiting the positions on the put side, whether they will be interested to come back. That is something which is going to be testing the market for tomorrow. So you can expect a powerful short covering or further big selling happening tomorrow based on what these guys are going to be doing. Now, moving on to this particular one gives you that clue. Now we will be looking at OI spurts only for the option segment. This is a beautiful one if you wanted to understand the 4 quadrants. Long build-up, short covering, and long unwinding. I told you about the 50% rule, right? When I will be a buyer, whenever a particular call or a put moves more than 50% in OI, more than 50% in price, that's an excellent opportunity to go on long. Why? The more buyers are creating a position, there is a demand. That's the reason the price is also going up. OI is also going up. Go be there as a buyer. When I need to be a seller, when the OI goes by 50%, price falls by 50%, go and attack that area, because that is where the entire set of community of sellers are there. Today, where exactly you are seeing it? You see all the calls are being returned, more than 2,500% in terms of the OI chain. The price has more than fallen, more than 60-70%. The sellers are absolutely controlling the call strikes. Only catch point is on the put side towards the late end, they have started unwinding some positions. Tomorrow, if there is going to be a gap down, be very careful. Some of the people have already booked their profits. If it is a flat opening, I can expect a move to be happening on the lower end, because with the global market pressure, they might drag you down. But if it is going to be a gap down, people who book the profits today, some set of people will be booking their profits tomorrow morning. Be careful with that. Don't chase the gap down tomorrow. Only reason is purely based on this. And you have, in domestic news, which is positive, the crude has been falling. In terms of the crude also, if you look at this data now, it has come down from almost 130 to 120 odd zones. So there can be some kind of a pressure coming off from the crude. So watch out for that, at least for the day. I'm not looking at positionally. I'm looking at only for tomorrow morning till 10:30, 11, how the things can be playing out in this market. That is the game which we are going to be seeing based on this data. And here, again, look at from at the money, 3 strikes above, 3 strikes below. Don't look at all the OTM strikes. That doesn't make sense. If I'm seeing the puts being bought, I also needed to see the puts being covered on the short unwinding position. The quadrant 1 and quadrant 3 need to be the same. Quadrant 2 and quadrant 4 need to be the same. That means the buyers are there on the put side, the sellers are there on the call side. Only clue here you can get is, if the buyers are coming in on the put side, I want the short covering to be happening and deep in the money and in the money, and I want OTM strikes to be bought. If you are seeing here, these all should be short covering, which is in the money and deep in the money. Above that, I needed to see the long build up on the OTM strikes. If that is coming in, that will be a trend day for all of you. If the short covering is happening on deep in the money and in the money, and OTM strikes is having a good volume build up, and the OI is also building up good, then that particular strike you will be seeing a big move happening on the upside, that is when you can chase the OTM strikes as a buyer. That clue is going to be available here. Moving on. I'm just giving you like in a quick glance because we have plenty of things to go around. This is on the individual OI data which you wanted to see from 33,100 to 40,000. You will be able to see the entire data. Here we have given you an option to choose, choose for 3 minutes, 5 minutes and other things. In case if you wanted to see only the change in value today, you can get it in a fraction of a second here. So where exactly the maximum OI buildup has happened? Everything has happened on the call side. The put side OI is very minimal. Call side we have close to 3 crore. The put side we have only 1 crore. The maximum OI buildup has been happening on the call side. They've been continuously writing it. They've been making steady progress over there. Now, here in case if you wanted to see a particular like in a script, you can collapse it, see only for a particular level. If I wanted to see from 34,000, you can select the period and you can only look at that particular data where exactly. If I'm a seller, this is going to be like in a beauty news for me because I've been creating positions continuously and it has been looking pretty hot for me. The sellers are the ones who are having position. Imagine, if I don't have any positions on the put side, I have not created any sell positions on the put side. Does it make sense for me to take the market higher now? I'm not going to enjoy anything. Maybe the future buyers will be enjoying it, but as a seller, I'm not going to enjoy anything. That's the problem here which you are seeing now. Everybody is heavily short in this market. They are expecting, no, the market can go further and further lower. Only possibility here is, if there is no fresh shorts coming in, these shorts are going to be forced to cover their position. Watch out for the level, what has happened, there are few things which I'm connecting it. If you remember, the future OI, what has happened in the last 1 hour, option OI, what has happened in the last 1 hour, connect with our morning theory of the open and high. They've already created it. Some of the buyers are not letting it go. They wanted to see the market go higher. That's the reason that they've written at the lower level and then take the market higher. Now, if the shorts are heavily there in one side of the story, and if there is nothing for them to take the market lower tomorrow, they will be forced to cover their position. This is going to be moving the market significantly higher. Get ready for that kind of a move tomorrow. Next. Option premium. This is one unique feature which you will not be seeing it in other platforms. Here again, imagine if I am a buyer. If I wanted to know where exactly the premiums are lower. Again, I will give you another secret here. Today you're not seeing anything which is in the negative. There are going to be days wherein the option prices will be trading in a discount. If it is trading in a discount, what is the clue? As a seller, he doesn't have anything to sell. Instead, he has to give something back to the buyer. Then, there is a possibility there can be a short covering on that particular direction because he has to give it back to the buyers. Always remember, whichever side is having the premium higher, the seller's eye will be lit on that particular direction. He will be trying to focus to sell more on that particular direction. If you see at the money is having the maximum, it is around 680. The high-V levels are crazy at 59.60. That's the reason you are seeing a maximum premium buildup, which is going to be there on the at the money strikes. So the most important element is you will see the price gradually coming lower and lower towards the end of the expiry. 1 day before the expiry, the prices on the premium would have come to almost 180 to 200 rupees. On Thursday morning, we will be seeing the same data. Let's look at it Thursday morning. We will be seeing it somewhere around 180 to 200 on all these strikes. So currently, the game is completely for the sellers. Don't try to be an aggressive buyer in this market. Next, moving on. My most important feature, which I think will make sense to you to track and then play in the market. If someone wanted to know today where exactly the market is going to be moving for me, use this one. What is this? I've given you a simple clue of trending OI. What is trending? As the name suggests, if the market is going to be moving lower or higher, this one is going to give you the clue. So what has happened here, the market last traded price at around 11 in the morning was 32,975. I think today we had the an OI issue, the NSE issues and other things. That's the reason you are seeing some data delay and other things. But let's look at from 11:30. So 11:30 there was a day low break, which was around, DLB is nothing but the day low break. DHB is day high break. 32,883 was the day low, and there was a change in OI. Overall was 62 lakhs. During that particular time, the put OI is overall, the cumulative. You see the selected strikes on the top. It is a combination of the cumulative total of 15 strikes. I told you in the option market, who creates the position? It is the sellers who create the position. Where exactly they have created the position maximum? On the call side, 62 lakhs. On the put side is only 2 lakh. Where I will be as a seller who can make money. If I would have not created a position on the put side, will I be able to make money? No way. I've been continuously creating the positions on the call side. The clue is whether every hour they are creating more and more position. From 62, 61, 60, from there 62, 66, 78, 78. If I'm creating a positions on the call side as a seller, what I will do on the put side? I needed to cover my position because the market is going to be written on the call side, and I needed to cover my positions on the put side. Look at it. It moved from 3, 3.95, 5.19, 732, 787. What has happened? The next one, 787 to 414. What has happened on the call side? It has moved from 66 to 78, and the Bank Nifty has made a new low there. Is this the clue which you are able to get it? How they have been taking the position and then covering it and then creating a massive push on the call side to take the market lower. This is going to be an important trend setter. And always remember, in the last one we have given you a sentiment. The whole day the sentiment was bearish because the market was completely bearish. They couldn't sustain and then move higher. The whole day was bearish. But I've also given you a column called direction change. What is that? Intraday, there can be a minor pullback which can be possible. But if that pullback is continuous, similar to this, if you see in 4 or 5 green, I wanted to see a big percentage change which is going to be happening. Do you see even though the move is happening, we don't see a significant price change happening here. In terms of the OI, it has to move significantly. That difference is not happening. The only time today there was a big difference was happened is around, the time is around 1:30 to 2. There was a 15 lakh change, that is 26%. And towards the late end, there was a profit booking which happened, and then the short covering happened. That's a different ball game. But the trend for overall day, it has been intact on the bar, except the last one moment wherein huge long unwinding happened, huge almost long unwinding happening on the call side as well. Imagine if I'm a short, I would have carried home the positions on the call side. That means there are some weak hands who wanted to get an exit. During intraday, this one particular feature is enough for me to identify the trend, where exactly the markets are moving, how it has been moving. I'll show you for Friday, you will get to know how the markets have been moving here. I'll show you on 30-minute time frame. So in the morning, it opened bullish, and then the fall started, or these guys were starting to ride. You can clearly see how the OI data is keep shifting gears. At almost 12 o'clock, it went to a high of 40 lakhs. On the put side, it was around 24. But around 1 o'clock, from 40, 13 lakh got unwounded. That means the shorts have started to cover their position. And then it went to a day high of 34,574. Further short covering, 34,912. Further short covering, 35,68. Here, from 24 lakhs, once the sellers are starting to cover their positions on the call side, they started adding more positions on the put side. It moved from 24, 26, 41. You can see the percentage change here. 15, 30, 200%. This is the trend reversal which I will be normally looking for. Once the OI completely shifts the direction, that's when these guys are dumping one side, moving on to the other side. A significant shift. Once that happens, you will see a follow-up. Imagine if I am a buyer, I would be looking to see this data. Once the direction change happened, if you remember the two candle theory which I was talking about, it happened on that particular candle. That's how I interlink the chart to go and take a trade. You wanted to see how the two candle theory playing out? I'll show you at 1 o'clock how the market has given you the two candle theory. What was the time I said? 12:36. What are the things which I wanted it? I want two consecutive bars, volume bars of more than 50K. I got it. The highlighted green ones are the big ones, or the 50K. And look at this data. The RSI is above 50. And then I'm getting a crossover. The super trend is piercing through the VWAP. And the most important thing, all are full-bodied green wick, and I'm able to see the market moving higher. None of them hit my stop loss. It would have given you easy 300 to 400 point move. Simple thing, combining the OI, just connecting the dots on the chart, I should be able to take a trade on the third candle. So someone who asked me, Shiva, like, what is the logic behind the two candle? I'll just show you that. Someone who didn't attend the last session, who wanted to know what is a two candle theory. I'm a storyteller. Okay, what I have done is given some small characters to each of them so that it will be easy for you to understand. Now you saw the chart, right? I'll give you a small clue how these charts play out. You are a king, okay, and your indicators are going to be your soldiers whom you are going to be deploying in the market. As a king, I needed to know which are the indicators where I needed to use them. That's going to be the most important element. So the king has to play with very carefully with his resources in the battlefield. Now what happens here? Who are the key resources for me? Queen is equal to my open interest, weapons is equal to my volume, territory which is going to be my RSI, and then the candles which is nothing but my battle. So now coming back to my indicators. Why the parabolic SAR is a bishop? Because parabolic SAR, if you would have seen, it will go like this, it will go like this. It does the same job of a bishop. Next one, the knight. The knight goes L, correct? The super trend, if it is above, it will be like in a cell. All of a sudden, you will see like an L, that means it is going into the buy territory. Super trend to the knight. So sorry, yeah. And then the pawn, that is the weakest guy in my an entire kitty. He will be changing his side based on the king. If the king doesn't feed him properly, as long as king is feeding him, he will use it as a support. If it is not, he will use it as a resistance. Okay, because he will go and join the opposite army. Then the last one, the rook. Rook is nothing but my VWAP. That guy is going to be the strongest one who can give me all the support I needed it when the market needed it. How I needed to initiate my position? Once the open interest, my queen shows whether a long build-up or a short covering, and if the RSI, the territory trades above the 50, between 50 to 75, and the volume, that is my weapons, two consecutive bars of more than 50K in Bank Nifty and 125K for the Nifty, and all your soldiers, the bishop, the pawn, the knight, and the rook below the candles, then deploy your king as your resource in the third candle with the first candle low as your stop loss. If the first candle low is getting hit, that means your kingdom is getting breached. Get out of the kingdom. As a king, you needed to surrender. Simple. Keep it simple. It will work. Now, the same thing in case if you wanted to short it, we just follow this. Only thing is, I will be looking for the RSI to trade between 40 and 25. The same formula applies. And then, I will take some help from the global allies. These guys are going to be my foreign allies, the India VIX, the crude, the US dollar index, which I was sharing it in the first page, the bond yields, the USD INR, and then the news, which is taking a dominance in this particular week. Last important one. This is on the two candle fall. Third candle will be my entry. The first candle high will be my stop loss if you are a trader on the future. If you are an option buyer, look at the level, 36,200. We will buy, deep in the money, make some money. That's it. Move on. If you are looking for a call buy or the future buy, first two candles more than 50K, third candle will be my entry, the first candle will be my stop loss. Once it is above your buy price, once it is above that, trail it, make 1% returns, get out of the market. Don't be playing there. And this is a crossover trade. Whenever you see the super trend making a crossover exactly at the VWAP, if you are getting both the WMA and the super trend piercing together, that's the most important thing. That's called as the golden crossover, which I'll be taking a trade. So here you are seeing in crossover, simple, neat, perfectly take a trade. Whenever this golden crossover happens, I'll give you another clue. Whenever the golden crossover happens, from that particular point, expect another 200 to 300 point on the Bank Nifty move in the next 30 minutes. Whenever the golden crossover. What is a golden crossover? When the super trend and the WMA pierce together on the super trend, and I wanted a volume bar, and then the 50K bar, the volume has to be like in a full-fledged candle, everything happening, you will get that. It's a simple setup. And I told you about the like an OI spurts. Just take a screenshot of this one as well. 50% increase in OI, 50% increase in price. That's buyer's paradise, Q1, long build up. Rise in OI, slide in price, bearish. 50% increase in OI, 50% decrease in price. Seller's paradise, Q2, short build up. The third one, the slide in OI, rise in price, a short covering. And then the fourth one, both the price will be falling, the longs will be like an unwinding. That is called as the long unwinding. And I gave you the implied volatility levels. And I also shared you the setup, what I'm using, the super trend, and then the, the VWAP. VWAP will be default. Super trend will be 10-2 on a 3-minute and 5-minute time frame. If it is 15 minutes and hourly, use 7-2. And then the volume candle is 50K for each 3-minute. If it is going to be 5-minute, just like and multiply that. For Bank Nifty is 50, and Nifty it is 125. RSI 80-20, parabolic SIR 0.02 to 0.2. Use this setup. Let me know if you are not getting the results. Out of 10 times, your probability of winning is 8 times. What I have done here, if you remember, today also we took a trade at the support level, right? At the super trend level. On this particular day, when the market is moving on a 2-candle theory, either on the upside or on the downside, first time when they are coming back to the super trend, take a rejection trade or like in a support trade. Okay, that is going to be an area wherein you will be able to scalp for 30, 40 points. If I am a trader who missed the 2-candle theory, then the first support trade is going to be somewhere around, you see that like in a line which is happening, the next candle is the area wherein I would take a trade. The following green bar, that is more than sufficient for me to get the 40 points which I wanted it in a day. That's it, my trade is done for the day, and then get out of the market. Okay, so you can see clearly these guys are slowly but steadily would have moved the market. And today, again the same scenario happened. Don't take a support trade on the second time, which I wouldn't be suggesting, because someone who is coming back, that means they are knowing something which we do not know. The same thing happened here. The 2-candle theory formed, but we didn't get a signal here. Why? There was 2 consecutive candles of more than 50K. Why the third candle we didn't get a signal? Why we didn't enter? No. Yeah, more than 50K volume. You could have shorted on the third candle, but I'm not shorting it. Why? Oversold. Look at the RSI. What is the RSI? I said it has to be above the 20 mark. I don't want to get into the oversold territory once the RSI is below 20. Watch out. Many people, what the biggest mistake that they do is, once the RSI goes into oversold territory, they go and take the position. Immediate, the follow-up candle will be like such a big one, it will breed all the volume. So be careful. That's the reason we are not going to be taking a trade. Instead, we will take a trade at the resistance level. That's the area we needed to be taking a trade. So that's exactly the trade which I took it here. Once it went to the super trend, this is the candle we got an exit. 40 points. Get out of the trade. Don't overextend it. In case if you are trailing, book your profits. If it is keep on moving lower and lower, then you can keep on trailing it. Now, second time if they are coming back, do not even bother to take a trade. Because if someone has already breached the super trend once, second time, there is a bigger possibility of they breaching it and then moving it higher. Now the only possibility is the rook is going to be coming and supporting you. First time, the bishop on the knight will take care. Second time, the rook is going to come and support you. And again, remember when they are going near to the rook or the VWAP, if the volume is more than 50K continuously, then stay light. In this scenario also, if you see that, the green lines, the dark green bars, the volume bars, are all more than 50K. If I were there, I would definitely avoid it. Why? The first and foremost, you can get a big move because of the open and high, which was not still done. The buyers on the mind, they would be still playing that, okay, somehow we needed to take it down either today or tomorrow. They will be under some kind of pressure because they've already put in the money. That's the reason when the move is happening with the volume, avoid it near to the resistance area. Always remember, either near to the super trend or near to the VWAP, if the move is happening with the volume, avoid it. Don't blindly think that Shiva told me in first time I can take a trade at the super trend and at the VWAP. If it is going without the volume, then it is yes. If you see this, whole day it is getting dominated by the red bars. You see more of red or green there? The a highlighted one, more red, right? The green ones are very minimal. That means these guys are the ones who are controlling it. But if they are giving some kind of a fight, that can be visible only with these green moves. So volume plus the price, if it is moving higher with the volume, then you cannot beat these guys. They will try to take it lower. Again, we got a small bit of an entry somewhere around here with the 2 candle, but they were not able to give you much bigger move. There was a minor move which has happened. If it would have been like a scalper, you would have made money. Now, in the second half, again you got a 2 candle theory. What time? At around 12:50 to 1 o'clock. You got 250K. Third candle is your entry with the first candle high as your stop loss. If you'd have bought a put, you would have continuously trailing. You would have got easily in 200 to 300 points. There was another round of a trade. What has happened here? Today you witnessed both the 2 trades on 2 candle along with the significant super trend trade. They came to the super trend level. First time after the 2 candle, you got a rejection. 2 consecutive candles, you would have got the profit. Again, after this 230 move, I normally avoid the 2 candle theory. Because as a king, I know and I've deployed my resources. This 2 candle theory cannot be formed in the played in the morning. Leave out the 9:15 to 9:45. Consider the 2 candle only between 9:45 to 2:30. Whatever the moves happening between this is where the real fun is. 9:15 to 9:45, 2:30 to 3:30, it is all going to be based on the previous day positions or what they are going to be doing it for the next day. Or someone who wanted to exit the position, what they have created for the intraday. The action happens between 9:45 to 2:30. That's the area as an intraday player we needed to concentrate on the options market. If I'm an option player, I will be only playing during this time. That's the reason you don't get to see a signal in spite of the market making a significant progress, moving it higher. All these things would have happened. So how to add this indicator? Just go into the indicator field, just add OSPL. This is for people who are looking for the 2 candle theory and crossover trades and other things. You add the OSPL signal. Someone who's looking for a quick scalp, that is only for 1-2 candles. Okay, that is not for everyone. Someone who will be real quick, I can enter and exit in a quick Shiva. I can enter in till in 3 minutes. I can exit my trade also in 3 minutes. Then you can go for it, the quick scalp. But the stop losses are going to be tight and it is going to be giving you a success rate of 50 to 60%. So I wouldn't be preferring for you to do it in a large manner. And guys, I think since we are getting late, okay. How many of you are feeling sleepy? If you ask me, I will continue for another 2 hours also. There is another one which is called as the Big OI. What is this Big OI? This is again a feature which we have enabled based on certain calculations. It calculates the price volume and also the OI, how it has changed in that particular time. You will not get to see this data for the whole day. What we have done is internally we have asked the machines to understand the pattern when they are covering the long, when they are covering the shorts, when they are building up some long position. Give me only those transactions. If you see the price, all these have happened towards the late end, 15:20 to 15:30, even there. But you would not be getting to see this data for the whole day. You will get only at a particular time, only when the big OI movement is happening on a particular level or a strike. Moving on. Active strike OI is another feature, but this is something which I've discontinued after looking at the trending OI because trending OI has given me a significant result. This again can give you a sentiment meter. When the sentiment meter is above 40% on the plus, it is going to be positive. The market is expected to be moving up. The same sentiment meter, if it is going to be in the negative, it is going to be telling me that the market can fall, and it has to be continuously, the sentiment has to be going lower. I don't want the sentiment meter to move higher and then come back. Then it is going to be like an intraday play wherein you will see a zigzag move happening. That is what exactly it's been showing up. One thing which I wanted to show you on the the trending OI as well, I'll show you in the graphical format as well, because someone who wanted to see in the graphical format on a 30-minute time frame, all you needed to do is just click on this show graph view. Here you can get a clue how the an OI is getting built up and why it is moving lower or higher. This can also give you a clue. In the morning, it was minus 30 and it is slowly moving lower and lower. If it is in the minus, a clear indication that it is going to be like in a bearish market. If the same one, you can clearly see the OI where exactly the maximum action happening. OI on the call side is much significant compared to the put side. So clearly the writers are still holding their positions on the call side. Yes. I am looking at 7 strikes above and below at the money, because that's where the maximum action is going to be happening. No, it was in the morning. This one was triggered in the morning. But what I have given you an option is, if you feel, Shiva, today we had 1,500 point move, I don't want to see this data. You have an option to change the strikes what you wanted it. I have given you that. Even if you want to choose only 2 strikes, you can do it. Okay, I will give you everything what you guys want. I know this is going to be a question which is going to be coming up. So I will give you an option. You can pick and choose what strike you wanted. But I will give you default 7 strikes above and below from at the money in the morning. Okay, so this is what the graphical view can do it. Moving on. Interval wise way. Someone who wanted to track 15 minutes hourly and then a daily. So where exactly now the positions are getting on a daily basis, they have been continuously writing all the calls. Everything is short build up here. Why am I seeing long build up on this? Anyone can say why 43,000 CE, 40,000 CE and 34,000 CE all having a long build up? Why? Margin, right? So you guys wanted to enjoy the margin benefit, so you go buy an OTM call because you have been selling all the calls and you wanted to buy something on the OTM, and OTM prices will be moving from 5 rupees to 15 rupees because everybody is chasing that to hedge your positions. Okay, so don't give too much of importance. That is only to hedging. People will be wondering, Shiva, how come you told me calls are being returned? How come the calls are being in green today? It's purely because someone is hedging the OTM strike and the value is going to be coming down to 0 by end of the expiry. So they just wanted to hedge their position. I will get 400, I will hedge for 5 rupees. That's okay. And all the calls towards a late end have a long unwinding. This is again a small bit of a problem. In case if the global market doesn't support, the buyers on the call side, they have been holding their position for 2-3 days. Today they would have fed up you guys are not even giving any bounds here. You have broken all the critical support levels and you have been continuously falling. I will give up. And that's when you will see some significant reversals happen as well. So this is what is interval-wise OI data. Moving on, multiple OI, that is something which I don't use it. This is for the straddle and strangle players. The straddle players, by default, we will give you a straddle which is going to be conducive in the morning. If you don't say that, no, I don't want this Shiva, I will move something else, you can choose whatever that you wanted it. You can trade on that one. The same goes with the strangle chart as well. You can pick and choose whatever you wanted on the strangle, whichever the strikes which you wanted to choose, you can do that. Moving on the open and high. You have seen this particular one with the example. Let's see tomorrow whether they will be able to take the open and high on the futures and then the calls. As of now, still this is pending, both on the call and the open and low. That means the sellers and the buyers who would have done the trade in the morning, they still might be having some expectation based on the global market scenario. But looking at the current scenario, it doesn't look like that. And then the OI expiry strategy. This is something which I'll be doing it on Thursday when we are doing the session. So I will explain it, what I'm expecting it. And moving on, these are strategies which we have built based on the AI or the machine learning. Here, in the morning before the market opens, we will be giving you a range both on the morning trades and then the 320. The morning trades gives me a clue today. Shiva, I'm expecting a market to be falling. This is the range. If the market opens, that's the area for you to enter. So it opened between that range. From 1,000 rupees, it went all the way to 1,670. If I'm a morning trade player, I will normally play this for 5 to 10, 15 minutes to the max. Nothing more than that. This is just for the opening trade. Someone who wanted to finish my opening trade, go to the work, they can use this morning trade. Moving on, the 320. Someone who says, Shiva, I don't have the time and energy to play for the whole day. I can spend my time only at the end of the day and then close my position the following day. This is for the people who can take a trade at 321. If the market moves 1% by 330, close your positions. If not, buy today, sell tomorrow. What has happened on Friday? Friday, we got a put signal at 8:55. And this is the 320. Exactly at 320, it was at 8:50. It was closing at 8:25. It opened at around 1,300. It kept on. You can keep trailing your first candle low. It would have given you more than 60-70% returns. So 320, I sincerely say, do not use your capital. This is a highly risky one. Use your profits to test this, because it is a highly risky trade, because it can give you 100% return. It can also take you 50% of your capital away. So that's the reason we don't normally reckon for the small players to play on this one. Moving on, the strategy builder which I showed you in the evening, and along with that the FI and DI data which we have it. Now I will come back to the connecting dots and then I'll go into the advanced chart. This connecting dots is nothing but whatever the things which you have learned today, I have combined everything to give you a perspective whether the market is going to be bullish or bearish. If you look at this data, I have considered the Dow, the VIX, the volume, AGV, OI interpretation, the VWAP, the super trend, the RSI, the price, and then the daily trend. The daily trend has been from morning, it has been continuously falling. And these guys have been building some bearish positions. And towards a late end, they were able to close it at the day's high. And you can clearly see, except the Dow, all other parameters, 80 to 90% of the parameters are giving you the bullish outlook. So the market was trying to inch up towards the late end. If I'm a bearish player, what I would have done, I should have closed it at the day's low so that I will be able to get a big gap down. Due to the exit poll and expectations and other things, the market is doing something. Tomorrow, it is going to be very volatile. Try to play small, because I'm not expecting a big fall. In case if it is starting with a big fall, that will be used as one opportunity to trap these people as well. Be very careful. Tomorrow morning, imagine if you guys are getting another open on high on the call side. Okay, if there is going to be a gap down, and if there is another open on high, watch out. When they are continuously creating 2 days of open on high, there is a bigger possibility that the second day they have an opportunity to go and hit that number. So you needed to be watching out for the second day open on high. It's going to be very interesting tomorrow. We will see that. And we have given the VIX as an index chart. If someone who wanted to see how the VIX is playing along with the index through the day, intraday, we have given that option. But positionally, for me, the VIX is not moving high, which is suggesting me there is some selling exhaustion coming in at the lower level. Even if you have been looking at the daily chart on the Bank Nifty, it is already getting into oversold territory. It has already gone to 27. In the last few months, whenever the RSI has gone below on the daily chart around 27 to 30, you have immediately started to see a recovery. Now we are in that particular area. So if there is a fresh shorting which you are thinking about, I would sincerely say no. So watch out. This is the level wherein we have seen significant bounce coming in on the Bank Nifty. Nifty, yes, it has gone to that level. At least 2-3 times we have got a reversal. The same area it is coming in. And watch out, the selling pressure is more today. That is interesting on the Nifty. There can be a minor, balancing act that can be done, because Bank Nifty is already oversold. They might just do a temporary bounce and then keep Nifty under check. That is a possibility which can be happening. Be careful with any fresh shorts at this juncture. Moving on, because VIX is not suggesting me to go for fresh shorts at this juncture. And multiple window risk calculator. This is an update logs. Whatever the features which we have added and other things, someone who wanted to know when exactly we launched, what are the features which we added and what are the dates. It includes all the timelines which we have released and the updates which we have released. So you will be able to track how the OI pulse progress has been and so on. And moving on, the plans and webinars. Someone, I think all of you would have got your plans, complimentary plans. In case once the plan is over, tomorrow morning you can avail it from our counter, so you can do that. So our team will be there. You can ask them, one of the members who are wearing an OI Pulse t-shirt, ask them, they will be able to give you the coupon code. And once your plan is over, in case if you plan to extend your subscription, you can use it here. So what we have done is we are also giving you one complimentary live commentary session every month along with the subscription, which you will be enjoying it at almost literally at zero cost then. Okay, we have kept the prices at a competitive rate. And moving on, in case if you wanted to just attend my live webinars, we have an option here. My next live webinar will be on the 17th. You can subscribe to that. Once you subscribe, you see a smiling man on the top right. You can click on the webinar details. You will be able to see whether you are paid or completed your free complimentary webinars here, and the webinar details will be available here. So all the details will be here. You can click on the Zoom link. You can join the session. And moving on, in case if you have been part of the mentoring sessions, we would have given you the link, we would have given you the password, and then the recording. In case if you wanted to go through the recording, we will also give you all the PDF manual which is required, whatever the things which we share in each of the sessions, what are the documents and everything. It will be shared in this PDF folder. You will be able to download it. Recording, it will be available for 60 days for you to revise the content and then do it again. So all these sessions will be in 6 hours long. So be prepared in case if you are thinking about the mentoring programs. So all these are the ones which we have done. Along with that, you have the FI data. These are regular ones which you will be seeing it. In case if you are thinking about the risk calculator, this is one feature wherein the retail community who wanted to enter, I normally don't suggest, say for example, someone who wanted to enter the market with a 10 lakh capital. The maximum that in a trade as an option buyer, I wouldn't be deploying more than 30% of my capital. And my risk appetite, imagine if I'm keeping it at 10% of the 10%, a 3 lakh. If I'm trying to buy an index call option or a put option today, I'll buy around 33,500 put. I should be able to okay, I'll be buying 33. I should be able to buy 16 lots. And people always ask me, Shiva, what will be my pyramiding level on the upside and the downside? If the price is currently trading at 729, you can go up to a higher range of 801 and the lower range of 656. Don't go further. Don't keep averaging. Don't keep averaging it on the upside. Imagine you bought only 15 lots and your average is around 750. The 670 will be your stop loss and 776 will be your exit. And you're not entering at anywhere. You're entering at a level wherein you know that there is a support and resistance. And here, the stop loss which you're looking at is on the capital deployed. So you will looking at wow, what a big stop loss. But if you look at it on an overall level, it is only a 3%. But when the risk reward is in your favor, you can get 3:3 as well. So that's about it. And on Thursday, we will be doing a live commentary along with other speakers here. And I will be decoding the data in live market. I will help you out to know what are the things which I observe it. You will also be getting to hear from other speakers as well, what are the things that they have been projecting. And let's see how it plays out. Tomorrow morning, looking at the current scenario, we might get a gap down again. But what happens after the gap down is going to be an interesting one tomorrow. Let's watch out. Okay, I hope a little bit of a session. I know and I have kept you guys and not made you to sleep. Get ready for a similar kind of a session in the upcoming days as well. You needed to be taking a big toll on your health for the next 4 days, but I think pretty much you will enjoy it when you complete the 5-day session. Yes, I got something out of this. I hope all of you would have enjoyed it. Thank you all so much, and I will be happy to take some questions now. Thanks everyone. Any questions? But there will be a few more interesting things. I will be available here for the next 4-5 days. In case if you feel that you have anything which you wanted to know, please feel free to ask me. And once you try it, give us a feedback. We will definitely be happy to hear that. And in case if we needed to make some changes, we will be happy to do that as well. Yes, please. Yes. Yes, we will be soon doing that. wherein you will be able to place the orders in OI Pulse, like in either on the chart or using the strategy builder, and it will automatically go trigger through the OI. We have been talking to a few brokers, but we will get that done. This is going to be the plan for this current year. Thank you all so much. You all have a wonderful sleep. Good morning to everyone.